Okay, so good day, everybody. Today is 2017 March 20th. Yeah, hi. Welcome all friends join the live webinar. Normally, the live webinar will be. I will post the link to Facebook. Uh, every Monday, if I have time, I will just post it. And the starting session will be around 10 p.m. Singapore time, or 10 a.m. in New York. All right, so let's just start checking this week's trading setups from the economic calendars. All right, so Monday, let's just go to the calendar, because I live in Singapore, so I just use Singapore time. Okay, in case you don't know. Okay, so today published several the Germany PPI. Okay, and also there's a wage in Eurozone, which is above the previous. Okay, and tomorrow there's a USA President Trump speak we need to pay attention to, and also there's RBA meeting minutes. Okay, this meeting minutes will have some impact with Aussie dollar, and also the GDP. Okay, CPI for the GDP. And don't forget that today there's a news that the Great Britain will start the Brexit on March 29th, okay, to start a negotiation with the Euro for 2 years to make some deals about the Brexit. So I think sterling will be quite volatile later on. So if you don't like to trade this uncomfortable volatility, you don't need to really to look at the sterling. Okay, and also Carney, we're going to have a speaking in the tomorrow, Tuesday, and there will also be several FOMC members, George, Master, and also Dudley will have some speakings in Tuesday and Wednesday, and also there will be a New Zealand, USA existing home sales, which is not so important. On Thursday, the RBNZ interest rate decision. Okay, the Kiwi. So the Kiwi dollar will have some movement on Thursday. Okay, but from the broadcast and also the previous, actually there's no change in the interest rate. So I think it won't affect the Kiwi a lot. But if the dovish speaking of the RBNZ rate statement comes out, it will actually drops the Kiwi. Okay, and also in Thursday there's of course initial job claims. Wednesday there will be a crude oil inventory. Okay, the EIA report. So if you trade oil, just pay attention Wednesday. And Friday there will be a trade balance for the Kiwi, and also Euro, the several manufacturing PMI and the service PMI. So this PMI ratio will be you can actually have some indication on the economy and also the companies running operations status for the Euro session. And also there will be a Chicago Fed President Ivan speaks, okay, and also the core durable goods, which is very important data as well, and also Canada core CPI, okay. So that's basically what will happen in this week. Okay, nothing too serious. So just pay attention to the timing of the publication, and also pay attention to the price movement. Okay, so let's get back to the from the DXY. Okay, so DXY have a very powerful fall after the Fed increased the rate. So it's actually a priced in event. So that's why the DXY actually drops from 102, and it's actually in last week before the FOMC meeting, the last Monday, we actually have some analysis on the dollar. So the 102.07 is a 0.618 pullback. So this one has a very good resistance. Okay, and we want to buy the dollar only when the dollar pulls back to 618. If you remember, right? We don't encourage you guys to buy the dollar, at high place. Okay, I say only when the dollar comes back to 139 to 0.618, now you start to buy. Okay, right now the dollar actually breaks the 0.61 a little bit, but from the price action we can see there are some buying force comes in, and also very important structure is here. Okay, from 100 level to 99.90. Okay, so this would be the structure. Okay, this is a double bottoms neckline, breaks out, pulls back, goes up, and also pulls back all the way to 100 level. So I think DXY will have some support in 100 level without some crazy event. I think it's good to buy the DXY here. Okay, because it's approaching 0.786 and 86 at the same time. So we can consider to buy the dollar, aim for reversal, aim for a rally, and stop loss just below, below 99.50 will do. Okay, maybe your stop loss would be, just 99.50, maybe 99.30, or maybe 99.10. Now up to you. Okay, but you need to calculate the risk or space for you to buy the dollar. Okay, but I think 100 level is definitely good support from the hammer candle. If today the closing price is like this, I think it's a good bullish candle, right? Do you agree? If you agree, that please type 1. If you agree, please type 1 here. Okay, let me just see whether you guys get my thoughts. All right, this is a bullish candle, right? So tells you that 100 level, the neckline here have very, very good support. So don't sell into the support. Okay, you want to buy from the support and sell from the high place, sell from the from the resistance. Okay, so this is for the DXY. Okay, let's move on to the gold. Okay, the gold is definitely our very strong animal, right? Since the last the Fed's meeting. Okay, and do you still remember our ABCD patterns? If you remember, which I published in the Trading View, right? I have ABCD patterns completed at 1195, right? 1195. So this is a very, very good buy. Very, very good place for you to long the gold. Okay, this level. Okay, this level, and there is also a harmonic patterns here, right? We mentioned that. Okay, so well, I think in our students group we have some people who bought at 1197 and enjoyed the good rally, and it's just hits the first target within just several hours. Okay, the first target is 1221. Okay, initially I need to clarify with you guys something. Okay, I draw this chart in Trading View. Okay, I say the ABCD patterns complete, and for aggressive buyers, right? For aggressive traders can take the long from D. Okay, but you set a stop loss. Okay, in downtrend, focus on lower high to short. Okay, so when the price goes back to 1221, if you want to short, you need to check the price action, right? And also you need to understand if any changes in the fundamental side. Okay, so there's definitely the Fed increased the rate, but it is not so hawkish than the market expected. So the price actually went through this level. 1221 is broken out. Okay, so if you see a very strong bullish candle breaks this level and pulls back, you don't want to short anymore because this is too strong for you to short. Okay, so you need to wait for another level, which is a 1273.40, the 618 level. Okay, so this is a very good place, 1237.40. Okay, you need to get the entry of the sell at above this level or at this level. Okay, don't short right now. Don't short when the market just shoots like that. Now it's very, very bullish, and the momentum will be so strong. Okay, so I think still have some room for the gold to to pop out to the 1237.43, and look left. There's very strong structure here, right? This is a broken structure. Have a bounce here. Okay, the market bounce from here and breaks out and pulls back, right? Pulls back to the previous resistance. All right, so this one actually in confluence with 0.618 level. So I'm looking forward for the gold to test 1237.43 for one more rally. Okay, to complete this wedge. Okay, to complete this wedge. Right, and you check for the price action and find if you see a candle forming like that, you can consider short. Okay, you need to have a long pain bar testing the 618 level, but fail to break through, fail to close above. Okay, if you see some candle like this, it's actually a good signal for you guys to short. Okay, Don't worry, I will explain all the yen later. Okay, I will explain in the later. Okay, let's finish the gold. We finish the gold first. Okay, in 30 minutes charts today, we have a very nice buying opportunities here. If you're using a structure play game, right? This is a structure play. Okay, previously, the gold is actually having some resistance at this level. Okay, at this level, it breaks through, it pulls back. Okay, so when it pulls back and you see the price sit nicely and have this kind of a pink bar here. Okay, it's a long bullish pink bar. Okay, the pin is tailing down, right? So see this one, you know, oh, there's a bias here, so you can buy after the pin formed, right? To buy the 1 to 30 or the 1 to 31, up to you. And right now, and also you check for the 5 minute chart. This is how we how powerful the harmonic pattern it is. Okay, you can see, you can identify a strong move, a very strong rally, which is an impulsive wave. Okay, this is an impulsive wave. Okay, major trend goes up. So you see the price come down. Okay, don't end notes here. Who is end notes in my computer? Yeah. Okay. All right, so you see a major move up, and the first wave comes down, and the second wave, you just copy and paste. You check the ABCD completion point at 1 to 30.16, right? So you can buy from this structure from the here. Okay, buy from this structure. Okay, you can set your stop loss just below this pin, below 1229. That will be good, and you can have a very good return. In a very short time, you actually win almost 30 pips, right? From 1 to 30 to 1 to 33.50. So right now, I think the gold is still good to buy. All right. Okay, so this is a ABCD pattern in the 5 minute charts for the gold, and we identify a buying entry. Okay, and remember, in the long term, we want to short, or only want to short gold at 1 to 33.40. So we just hold your long, take your profit at this 1 to 33.40. That will be a very good trade for this week for gold. Okay, and let's talk about oil. Okay, the oil have a good move away and change the direction of the downtrend. Okay, in the 1 hour chart, the oil have a bearish trend doing like this. Okay, break down, pulls back, breaks down, make a new low, pulls back to the same place. So you find the structure to short oil just using the same strategy over and over again, where you have some very good return, right? Not always at every time you're going to make money, but when you make money, you make a big one, right? But when you lose small one. That's the key strategy, right? But this is a downtrend. And then the trend is reversed, right? It breaks new high, a higher high forms out, higher high, higher low, right? So oil pulls back, and right now, and then today it just comes to 47.86. Pay attention to here. This is a good structure of the neckline, right? This is neckline here. Okay, we have a one bottom, we have a second bottom, double bottom, neckline here. Neckline is here, right? So just wait for the price to see, just nicely touch the bottom. And also this is a 2618 trade, okay? Double bottom, 618 pullback, right? So you buy at 48.04 or 47.83. Now you win money, okay? Just using the same strategy, okay? I think our students group, our international students group are doing the good things, right? I saw some chart like Simon, and also some other students are joining the chart. Okay, so it's a good practice when you're trying to use all the things. 我在讲课. Okay, so this is something for the oil. Okay, let's just complete the oil analysis. It's a very strong, in the daily chart is very bearish, right? Bearish. But here you can see the RSI stop making lower low, but the higher low. See, the RSI is making higher low, right? The price is also don't make a lower low. Okay, so this tells you some consolidation will happen. Perhaps oil may push back to here, to 51.32 to 50.80. So this level is very important resistance level. So you can wait for the oil to push back to here and trying to short with bearish price action. Okay, in 30 minutes chart, you can also consider to take a buy, take an entry if the price ever pulls back to 48.20 to this structure. Right, to this structure, you can consider to buy at this structure and just set your TP at 50.80 or 51.32. Okay, so I think that's is good to buy the oil if the 47 is not broken. Okay, the key thing is it shouldn't breaks low of 47. If breaks low, the bearish trend will continue. So you don't want to buy anymore. But if it fails to break through 47, you can hold your buys all the way to the previous important structure such as 50.982. Okay, do you remember? Do you get it, guys? Any question for oil? Okay, so 47 didn't break. We can buy to 50.80 and see the price action to check the structure play, whether it works, to see the price action and short. Okay, if you agree or if you think that is a good idea, yes, just reply me. Okay, or you can take a screenshot. Just print screen, take your short. Take your screenshot and save it to the picture. Just remember the chart that I draw. Okay, all right, so that's for oil. Okay, let's go back to euro dollar. Now, the euro dollar is quite strong, bullish moves away, and forms an uptrend channel, right? Forms an uptrend channel, looks like that. Okay, so this channel we have tells you the euro is bullish, and all the way goes back to 1.08. So don't forget that there is a back pattern that I published in the trading view. So if the euro ever pulls back to that place, you can consider short. Okay, 1.0790. Okay, that's the place you want to short euro and put a stop loss just above 1.0840 and aim for several targets. Okay, so this is a bearish bad pattern. Perhaps the make gives you a good short all the way to here. This is a harmonic combination, right? Just like what the euro did in the 2 years. I think it's here. Okay, you can see the same thing happened. Okay, like this. Okay, it has a bullish bat here. Okay, and then it has forms another another bearish bat here. Okay, it's the same thing. Okay, so let's see whether the euro can play like that. Okay, so now this time forms a bearish bat, but then potentially they have another another harmonic patterns. Perhaps it's I think Scotty pattern or whatever. Okay, it may complete like this. Okay, so find your short when the price pulling higher and stop loss above 1.0840, and all the way maybe you can have a very decent a drop to 1.04 or 1.04 level. Okay, so this is for the euro. Okay, let's look for the sterling. Okay, sterling is pulling back to the previous structure here, the major resistance level, but not yet touched the 618 yet first. Okay, so the 618 is 1.2475, about that. Okay, and look left, there are some pink bar telling you there are some structures. So I don't want to short the sterling right now. I don't want to touch it. Okay, because the pre-exit is a headache. It's a headache. You never know when it will to to drive the sterling goes up if something happens or another crisis is just happened for the GBP. Okay, but a focus on 1.2476. This is a major resistance level. If you want to short, you can just make use of this level, this 618 618 resistance, and or you can also wait for the pullback. Okay, pay attention to the neckline here, which is 1.2230. Okay, this is a double bottom, right? First bottom, double bottom, okay, pulls back to neckline, boom, shoots up. So wait for the price to come back and buy, okay, or you want to wait for to touch the 618 and short. Okay, so this is for 30. Let's come back to the Aussie USD. Okay, Aussie USD have a very strong move out and actually takes our stop loss. A short from here, it takes a stop loss about I think my stop loss is about 0.7690. So it actually hit me stop out for this short term. On the interest rate itself, I short from here. I will stop out here. Okay, and I have protect me from further losing another 100 pips, right? So today, based on the 4-hour chart, we can see there's a bearish pin bar formed, okay? So after this bearish pin bar, it actually the price starting sideways, okay? So tomorrow have a RBA mini minutes. So in the daily chart, what we can see is, it still failed to break the high of 0.7780, okay? Still fails to break the high. So it approaching the resistance, you don't want to buy into the resistance, okay? Find some patterns to short. But right now, the only reason I want to short is on the pin bar that forms in the 4-hour chart. Okay, so you can take a Fibonacci measurement from the high to the low, and to determine that maybe you need to check 0.7735, that level. Okay, you check the price whether it reached to that level and whether it failed to break you or break through it. Okay, if the price testing the 0.618 but fail to make a higher high, you can start to short Aussie and just put your stop loss above 0.7748, and then you aim for a good reversal, okay, all the way to first target will be 0.77660, and also second target will be the beginning of the bullish candle. Why is the beginning of bullish candle? Do you know? Why I can aim for the origin of the bullish candle, guys? Okay, and you can just I can give you guys a show of the volume profile. Okay, so you can see from the volume profile, if I mark their values, okay, you can see here there's very few orders are filled or are executed or are dealed. There are very few deal was done into this part. So if the price ever comes to here, once it breaks the lowest point of here, it will be 0.7663. If the price breaks down here, it will drop very fast because there are no accumulated orders inside this bullish candle. The price may just all the way goes back to here. Okay, understand? So from the volume profile, we can see that nobody are trading here. So there's no opposite trades or buyers or sellers, neither. Okay, so there's totally no trades inside the bullish candle. And so when the price breaks through this level, it will just quickly come down to here. Okay, so let me drink water first, and you guys just reply me any questions if you like. Any questions? What's the setup for the range? Yeah, it's actually here. So you need to watch for the lowest point, 0.76627. Okay, if it breaks down this, a lot of buyers stop will be just a few pips away, maybe within 10 pips. Okay, so maybe a selling breakout, you can trade the selling breakout and all the way here. That's dark color and bright color. Dark just means there are sellers, buyers. Sellers, buyers. You can see the balance of the both of the buying force and the selling force. Okay, but generally speaking, I just use this one to show whether where is the most tradable session. Okay, the most exchange session, the price level, to find out the structure. This is a very good tool to find out structure. Okay, you see this is structure. So when the price comes back to here, there are some people who sold already at here. This selling people will try their best to cover their short. Okay, so you can expect a bounce from 75965. Okay, this is good tools to measure the structure. Okay, and yes, not pending orders, because the pending orders are actually hidden. You cannot see the pending orders, but you can have a feel that how the price. Why I say structure is very important, because only the structure will have orders to be filled, to be dealt. Okay, so when the price comes to here, once it breaks here, which tells you there's no buyers. There's no buyers here. No one willing to buy here. So the price may just boom comes to here. Okay, you have some just like the the magnet. Okay, the price will pull the structure will pull the price back to here. Okay, just remember the big candle inside there are very few orders. Okay, unless you check the 5-minute charts, you can see the inside of the bullish candle, right? You see here there are some orders are being executed here. Okay, but from here to here there's really nothing. Okay, all right, let's talk about the Aussie yen. Okay, our Aussie yen have a very strong down. Okay, here, see here, last Friday I published a short setups. When the price pulls back to the structure, I want to short. Okay, you can also use the 618 to short. Okay, so my my selling order was filled at the 87 level. Okay, I add another short at 87.15 because this is a 618 level and I have a very nice bearish pin bar. So far I'm shorting Aussie yen. Okay, I'm shorting Aussie yen. Okay, I'm looking forward to have this TP1 and TP2. Okay, because Aussie is already in a very high location and dollar yen may drops or may not be strong because the weak US dollar. So and also from the structure you can see that it's a very bearish move. Pulls back, cannot break high, we just come down. Okay. I open 5 lots, please explain. I don't know why you open 5 lots, but do you know whether you need to have a stop loss? Ideally, your stop loss should be above the pin bar here, above the pin here, this pin, above 87.27. So maybe slightly 10 pips. You just put your stop loss here. So you short, and you can have some target 1, target 2. You know. Okay. Yeah. Just set your stop loss above 87.30. Okay, hold your position. Or hit target 1, you close half. Hit target 2, you can close another half, and put a stop loss break even. Just enjoy the fall because the daily chart, I think all the yen, you know, kind of a consolidation, but it failed to make higher high. See the higher high, the highs are getting lower, right? So once the Aussie yen breaks down this consolidation pattern, it actually comes down to here, 84, and also to maybe 81. Okay, 81. So this neckline, I'm looking for a long-term shorting target. Okay. If your account is 17K, okay, which is 10,000, okay, 17,000 US dollar, you shouldn't actually open 5 lots because if this trade failed, if this trade hits your stop loss, your account balance will be suffered a lot. Okay, so you need to calculate how much money you want to, you know, how much money you want to risk. Okay, for example, if I short here at 87. Okay, if I short at 87, my stop loss about 87.30. Okay, so it's about 30 pips. 30 pips risk space, right? So 30 pips risk space. If you are 17,000, I think you can. If you're using 2% rule, you can have $340 to risk, right? $340 to risk. So $300, and for 30 pips, I think you can short one lot, or maybe 1.5 lots. But you don't want to short 5 lots because 5 lots short. If this trade hits a stop loss and you get stopped out, you will lose $1,500 if you trade 5 lots and losing 30 pips. Okay, so 1,005 is almost 10% of your account, 17,000. Okay, don't lose to more than 2% per trade. That is not advisable. Okay, yeah, yeah. You just trade too much. You need to really calculate the space. Stop loss here, you trade here, you measure the distance, and you think how much money you're going to pay for this trade. Okay, 30 pips. If you want to only lose $200, 30 pips, maybe just 1.5 loss. If right, because per pips is $10. 30 pips is $300, right? $300. If you only want to lose $300, you just trade 1 lot. Okay, that's my opinion. Okay, don't overtrade. You will kill yourself, kill your account. All right. So stop trading so heavy. Okay, although you may not making so much good returns compared with you trade 5 lots, but your account will be healthy. Do you understand? And this is the same thing that I want to tell everybody. Okay, the risk. Okay, you need to calculate the risk. Calculate your risk, and calculate your position. Okay. Right now, I think is good because the price action looks good, right? It actually comes down. It comes down, and also forms, another structure. In a 1 hour chart, they have this structure that was, break down, pulls back, and short it again. Okay, so calculate your risk and calculate your position. That's my advice. Don't overtrade. Don't overtrade. Okay. Ideally, you can have another simple mathematician. Is if you have 10K maximum you trade maybe 1 lot. That would be safe because it's only 1,000 pips move out will actually wipe out your account. But normally it won't happen in the forex market. Okay, so 10K you can open 1 lot, right? So if you want to open 5 lots, make sure you have 50,000. All right, and also make sure that 50,000 is not all your money. It should actually maybe 20% or 30% of your total savings. Don't risk 100% of the savings into trading. That's crazy and that's dangerous. Okay, because you lose it. You have several. If you market just moves against you, and you don't have stop loss, and you just finger crossed to hope for the to reach to the price to go back to your entry level, right? And you want to say, yeah, I want to exit the trade, and I will never do this again. I will never trade so heavy, but it just happened, right? So if that happened, you lose all your saving money. That's very, very bad. Okay, because your hard-earned money is not supposed to be thrown like that. Okay, you can trade maybe 20% of your savings, just put into trading to do some investment, but another 80% you should keep for some liquidity, liquid cash, right? And also some for future, for long-term savings, such as you maybe you can consider to buy some saving products or buy a fixed deposit, or you need to save money to buy a house, right? That is what we call wealth management, right? Because previously I work in the private banking, so all my private bank customers are doing like this. They never put all their money into one trade or into one market. Okay, they always want to split. They always want to diversify their portfolio. Okay, maybe 20% in bonds, 20% in stocks, another 20% in fixed deposits, another 20% in the structured deposit, right? And also they always keep a lot of cash, right, in case they need. Okay, but they won't actually throw all their money, like 10 million or 100 million, into one single trade or into one single market. That's risky. That's ridiculous. All right. So, do you get it? Okay, this is something that I want to share with you guys in terms of wealth management, in terms of personal financial targets, personal financial goals. Okay, because you are a trader when you're doing trading, but you need to take responsibilities of your wealth for your family or for yourself, right? So trading, of course, is 100% risk, right? You can lose everything, right? So you don't want to put all your money into one asset and lose everything. Okay. Okay, let's go back to NZD. Okay, NZD are what we have is so. Okay, Kiwi dollar. So this Thursday we have a Kiwi dollar's interest rate decision, right? So right now it's actually a range. Okay. Previously we short from I think from 0. I think we short from here, right? Maybe yeah, we short from here. Okay. If you check my trading view in the Kiwi dollar, that's a very, very nice trade. It hits both the target, I think. Really hits a both target. You see how accurate our target is, right? Here. So this is 73 to 69, 400 pips. Okay, and so this week, if you want to short the Kiwi again, you can consider two things. Okay, first is a structure about 0.7150. another is the 618 level. You can just pull it back to the 618, which tells you 0.6190. Okay, so just pay attention to this area, these two places. Okay, find some place to short, because in the daily chart it looks like the upside momentum is gone, and also the kiwi is starting in a kind of you know, bearish channel. Okay, in a bearish channel, so it may further drop. Okay, so find the rally to short. Okay, you have 3K in your account at the beginning, but lost 1K in 2 weeks. So I now monitor the risk. Let me just consider your question. Risk reward ratio, much more. Yes, you need to pay attention to your risk reward ratio. 3K, I think, is okay to trade 0.1 lot. Okay, what's your opinion on cryptocurrencies, future or put? What do you mean? Cyproto? You mean or crypto? What do you mean? What is these currencies? Future or bullish? Bullshit. You mean Bitcoin? Yeah, I never trade Bitcoin. I never trade Bitcoin, because the risk is actually in the credit risk, you know, is credit risk. It's those people, those merchandise, one day they may just disappear and stop paying, stop, you know, redeem your Bitcoins into real money. That's the trouble. Right, and the credit system is very weak. There's no central bank who support Bitcoin, right? Or maybe some central bank support, but so far as I know, like China, they don't support Bitcoin, right? Yeah, I don't trust them. I don't play that. I don't play that, because for me, I don't see any, you know, the real value of the coins, the Bitcoins. And another thing, Bitcoin have trouble is it's very easy for money laundering. Okay, so I think all the central banks, all the governments will not be, you know, to accept the Bitcoins in a very no, in the very near future. So yeah, no central bank support. Yeah, because previous I worked in the bank, and I know that for things like Bitcoin, right, it's very easy to go to have some linkage with money laundering. Okay, and right now the AML is very important for all the banks, all the commercial banks, all the countries, right? Because people don't want the terrorists to get rich, or terrorists to launder the money in the, you know, through the financial systems, and you know, to let the evil people to get rich, to do the terrible things to human beings, right? So I personally, I don't trade that. Okay, so Kiwi dollar, focus on these 2 points to find a short. All right, let's move on to the dollar CAD. Okay, so dollar CAD, congratulations for those for my students who take this bearish bad pattern, which is very good, which is very good. Okay, sometimes all you need to do is just focus on the patterns itself. Okay, whether it will become profitable or hit your stop loss, it really depends on the market itself, not depending on you. Okay, but what you need to do is just setting to identify this pattern, and set your stop loss, right? Set your stop loss, set your entry, right? Set your target, right? And I say the first target is already hit, right? 0.382 level. His first target hit. Second target is about 1.3185. So I'm looking forward for the dollar CAD to further decline to 1.3185. Okay. Yeah, I know that. Yeah, it was you are busy, so couldn't trade on price action, right? You couldn't trade, so maybe you can consider to sell limit or 0.1 lot. Okay, if you are using sell limit orders, you make sure that your positions are not too heavy. Okay, because sometimes because you don't have time to watch for the price action to have a confirmation, so you need to have a sell limit, stop loss there, target there. Okay, just resting, just let the market do for yourself. Okay, and right now, if you miss the trade, so just wait for this area. Okay, because this is a broken structure. If the dollar CAD ever goes back to this here, you can consider to short. Okay, you can consider short 1.34239. That is a broken structure. Okay. Yeah, Aussie USD. Yes, that's why same thing. I want to short. I want to short, but you don't want to. You don't want to. To short right now. I rather prefer to short the pullback here, 7734. Okay. Right now it's just consolidation. It's have some ping bar here, but the ping bar doesn't. Is the ping is not so significant. Makes some significant. Uh, Impact with other candles, right? It's just still within the previous candles. So it's right now it's a consolidation. So wait for the 0.618. It's better. You have a better risk and a better reward. Okay. All right. Lastly, let's talk about the S&P 500. Okay. So on the date itself, on the last webinar, we say we want to short the S&P at a 2390. All right. This is a broken structure. Okay. It actually breaks this support level. Break the support level, all the way goes down. Okay, you can find a buy if you have this structure identified. Buy from here and have some profit, right? And then if you want to buy another time, you have these patterns, right? These garlic patterns give you another buy here, and also it comes back to here. So this place that I think is okay to short, and it works good, right? From 2390 to 2370, that is almost 200 pips. So right now the S&P I think already breaks a new low. Okay, lower low comes out, lower high, okay, high, lower high, lower high, right? So the bearish channel is forming. So focus on the rally to short. Okay. Yeah, yeah, oil already discussed, oil, yeah. I think you just come in last minute. I'm going to finish this webinar because it's already almost 1 hour. Sing dollar, right? Okay, Sing dollar. Sing dollar, okay, in the daily chart, Sing dollar pulls back to the structure, right? So I think there will be some support here, This is a neckline. But do remember that it may test this place 1.323827. If you want to buy, you can use separate orders to buy and check the RSI. The RSI didn't really touch the oversold. And another thing is you draw the 618 level. You see, the 618 level is 1.3780. So all these are telling you don't buy the Sing dollar too early. Okay, you either wait for the price action or you wait for the downtrend channel to be broken. Okay, so you may just just sideways and goes down. Slip into the 618 level. But pay attention, don't short, because you short, you're facing structure. Don't short. You don't short, you short the pullback. If you want to buy with price action, buy with good structure. I think 1.3827 is a very good structure. This one here, this is also a good structure. Okay, so yeah, that's dollar Sing. Euro CAD, okay. Euro CAD, okay. Euro CAD, I'm looking bullish. Okay, the Euro CAD I think it's bullish because it breaks the downtrend. Okay, and it goes up, forming higher highs. Okay, higher highs, and looks like it's going all the way to here, to 1.46. Okay, so if you want to buy, you need to wait for the 1 hour chart to find a good place to buy, which you need to I think it's here also very good, 1.41. Okay, because 1.41 is a 1 hour chart that is previously acting as a resistance, right? Cannot go up, resistance. Okay, reject, all the way goes down, and it actually goes up, break this neckline. So yeah, you better to buy the dip. Okay, don't buy into the resistance. Okay, actually for the Euro CAD, there's a very very good patterns here, right? Very good patterns. Okay, if you for those who identify these harmonic patterns and trade 1.38 as long, when the same time the dollar CAD goes to 1.30, that's a very good buy, very good trade if you take these harmonic patterns. Okay, let's go to Germany 30. Okay, yeah, I hate the too many question marks. It's very to me, I don't like this formation of asking questions. It's like, what? Why you don't answer me, right? Yeah, if you want to if you want me to answer your question, I think you can just send your message. I will just explain to you. Okay, you don't need to place this kind of thing, right? You don't like people to challenge you and just 3 question marks, right? Okay, for the DX for the Germany 30 is actually having a bad pattern here, which some we already discussed, and it actually already filled the orders, right? So this bad pattern is still working. Okay, 119.37.973. Okay, so all you just need to do is watch for the price action and put your stop loss above 1 to 500. Okay, so right now you still have a wedge in the daily chart. Okay, this is a wedge in the daily chart. So wait for the wedge to be broken, pulls back and short. Okay, to have a better entry and a confirmation short, right? So the downside, you can look forward to have take profit about this structure. Okay, this is actually a topping formation. Okay, the ending diagonal. Okay, the buyers trying to break up, but finally they break down the wedge. Okay, so wait for the bearish candle to break the wedge and find a place to short or pull back, right? And also you can use these ABCD patterns, right? So these ABCD patterns may tell you where it's going to, it already complete, right? Complete the ABCD at 12127. So short the Germany 30 if you like to trade this. I think it's good to short here and aim for 11,000. Okay, all right, Hang Seng. Okay, Hang Seng actually have a very good structure breakout just 3 days ago in the last week. It breaks the structure here. So Hang Seng may still continue to rally up to all the way to here, to 25700. Okay, because this level is a structure that has been tested. Okay, a lot of selling pressure at about 2553, and also if you draw the Fibonacci ratio, you can find out the square is a 618 level. Okay, it's a 618 to 24630. But I think it depends. It depends on the market whether it's going to fill the gap or not. If the market fill the gap, so you may test even to 2544. Okay, so right now, since the breakout just happened recently, you can consider to make use of this gap. Okay, this is gap at 23800. Okay, so if the price ever come back to fill the gap, you can buy and aim for at least for the 618 level or even for the 2500. Okay, and until then, you consider to short. Consider to short the Hang Seng if the breaks this trend line. Okay, if you want to short when the uptrend is finished, breaks the uptrend channel, and to short. Okay, so yeah, that's all for today. I'm going to upload this recording to the YouTube, so you can find me in the YouTube just by searching for ProJack. I'm going to you can have my channel here. You can just click ProJack. So the recording should be uploaded to here. Okay, go to the playlist, or you can go to the videos. You can see that. Okay. And yeah, welcome. No problem for the webinars. I'm trying to give a weekly webinar every week. But recently I'm in China. I'm so busy. I fly to 4 cities within 1 week. So it's really, really very, very busy in China. But do remember, if you want to join my course, of course, you can visit my website, www.harmonicasia.com. That is my website. Okay, you can check out whether training videos, okay, the training videos, the Pro Trader course, how you can actually learn from my master course to learn all the skills, learn all the skills of the harmonic pattern, the structure, there's how to analyze the trend, how to analyze the 2618, a lot of things, right? And join our students club, okay, it's just like, like the things here. Okay, we have a students group that are chatting their chart here, and I'm going to consult, give my comments on this chart. Okay, so welcome you guys if you want to join our group. Okay, so just wait to the course here. Okay, have a nice day. Thank you. Bye bye. Okay, trading with care. Okay, plan your trade and trade your plan. See you next time. See you soon.